but Mario, how are you? You're here.
Good, thanks.
Okay, I'm gonna get you started and present. Um, let's just take a pause and and thank you. Thank you for being here, Mario. I just want to tell people, and I said this at the beginning of the day, is that the first two presentations were UBI and Douglas Social Credit, and Mario representing ideas, a system for going forward too. So we're getting three fresh ways of moving forward, and Mario is the third. And Mario Martinez, Lorenzo. Oh, I don't know why they just put Mario Martinez. I think Lorenzo, right? Well, Mario Martinez is a heterodox economist who has been a devoted activist for monetary reform for 10 years. He is currently president of Dinero Positivo and part of the core group of the International Movement for Monetary Reform. He has promoted the creation of a community currency in Galiza and is passionate and is a passionate communicator on issues regarding bank regulation, CBDCs, and alternative economics through his blog and YouTube channel. So Mario will unpack how banks create risk at the heart of our payment system and why public digital money alongside cash could be the key to a simpler, safer, and more democratic economy. With his trademark clarity and passion, Mario will turn a complex issue into an eye-opening, engaging experience. Don't miss this chance to participate. Mario, with no further ado, and the title is, Can Money Creation Be Much Simpler? That's thank you. And please start.
Thanks, Stephen. I hope I can manage to fulfill those expectations for sure. And I'm very happy to be here at the AMI conference presenting my ideas. Indeed, I've been like more than 10 years now involved. I'm passionate about all of these money reform movements, and I have influences from many different points of view. I have interests that were already brought up that I will try also to address during my presentation. And hopefully, my presentation serves us to see a clear path forward in order for these ideas to be implemented. And I believe there are simple things that we can push for that are compatible with all of these ideas that try to improve how society works. So thanks for your attention. Let's try to make this a little bit fun and interesting. And I'm really looking forward for your comments and the debate that can flourish afterwards. So, yes, my presentation is called How Money Creation Be Much Simpler. I understand many of you know that the current arrangement is quite complex, and I will try to cover it slightly before we dive deeper into the subject. And the the key idea I want to present is that by untangling public and private roles, we can achieve a lot of benefits that solve many of the deep root causes of our current crisis. So that's it, and I will start by giving you an overview of what I want to cover. First, let's see how the monetary system currently works. I will show some balance sheets for those of you that like them. Then I will try to point out some of the problems that are making headlines in newspapers that are right now in the conversation and social media and so on, and how do they relate with this flawed design of the monetary system and of the monetary creation. And then the main idea is how does having public money, how does having a public digital money and physical alternative already opens up a lot of space for further changes to happen that could leave us in a better money system. Especially, I want to focus that maybe having public money and private finance can be a very good first step even though the debate about how do we want finance to be is also open. And then a very interesting point that I want to make is I see a lot of proposals that I believe do want to solve many of the problems of the current system, especially money allocation, but that they do not think outside of the box enough, in my opinion. And I just wanted to point out that we leave many of the current problems untouched if we only focused on credit allocation problems. And I just wanted to link this with other proposals like public banking, MMT, and many others that I find happening all of the time in the internet, like green banking and so on. So I hope that is useful. And lastly, some strategic concrete steps to move forward and understand the current situation. So first of all, I wanted to touch upon one key issue all over this talk, which is what are we referring to when talking about money? Because indeed, what is money is a question that is not easy to answer. And I will have my own definition of money. Here, it's not only the things that the state provide in order for us to make payments and to save value for the future, but I would rather say that whatever kind of asset that provides safety, stable value, and it is liquid enough and easy to use, is already occupying this space of the demand of money. We have an economy that craves some kind of assets with these properties, and many different assets can become money at the end. Many of them are debt-based, others are not. I have a very broad idea of what money can be. And indeed, the state has a privileged position to offer such assets, but I would rather argue that it's not the only one that can try to put these things there. We could argue that bank deposits are one of these trials by the private sector. And right now we have three different forms of state money, three different forms of dollars, three different forms of euros or yens or whatever. So two of them are created by central banks, cash, and also bank reserves, this digital money that only banks and treasuries can access, and that serves as the settlement system for interbank payments. And then there's a third one, which is bank deposits. As many of you may already know, bank deposits are liabilities of the banking sector and are the main digital form of state money that we have access to companies, people, local governments, and so on. Then we also have many other forms of private money creation around. Some of them fall a little bit under the umbrella of state protection, but many of them fall not under the umbrella, so they are a little bit less protected by the state. And I wanted to give a picture of what do I have in mind when talking about this. Central bank digital currencies or bank reserves are central bank liabilities and thus are completely safe. They have complete public support. Then we have these bank deposits which are created whenever banks give loans, and they also have some public support, rather strong public support, I would argue. And then we also have other schemes in the financial markets that end up creating assets or financial instruments that serve these kind of purposes that money would really serve. And we saw in the last crises, in the 2008 and 2020 crises, that we ended up rescuing, by means of asset purchasing in the markets and so on, some or most of these shadow bank liabilities because they were very interconnected in terms of risks with the balance sheets of banks. So the more one private form of money is interconnected with banks, the more we are forced to support it with public guarantees and backstops. Then there are other very interesting and notable forms of private money like stablecoins, cryptocurrencies, and traditional ones like bills of exchange and mutual credit systems, social currencies, and so on. Some of them, I would argue, are not as similar to what money should be, or liquids, stable value, and safeness, but they are somehow also considered money by some. So in order to have a clearer view, if possible, of this, let's look at some balance sheets, which I rather love. So first of all, let's picture three balance sheets. This is the central bank, this is a private bank, and also a citizen or any company. So I started every balance sheet with some assets. I put gold in the central bank, but it could be any other real asset. And the equity represents the net worth of this institution. So let's start by seeing uh, how private banks get bank reserves from the central bank. Mainly, they borrow them from the central bank. Whenever private banks borrow, I don't know if you can see the blue point here, but private banks, whenever they borrow, they have a new debt in this side, in liability side, and they will have another asset, which is the bank reserves. At this point, the central bank also gains a new asset, the debt of the bank, but creates a new liability, the bank reserves. We could say that bank reserves are a way by which the central bank is monetizing private banks' liabilities. This is something that we could say also for the money creation of bank deposits. Whenever a company or a citizen go into debt, they acquire a debt with a private bank and they get a bank deposit as an asset. And in the private banks, it happens the other way around. The private bank has a new liability, the bank deposit. It promises you that whenever you want, you can take your money out. And it has another asset, which is the debt that you have with the bank. No? So I hope everybody has this more or less in their minds because it's going to be important. Then we have unconventional money creation. What happened during quantitative easing? In this case, central banks wanted to increase the amount of bank reserves in the system, and they did so by purchasing assets from the private banks' balance sheets. In this case, let's imagine that the central bank wants to buy these debts that somebody owes to the private bank. So how does it do that? Well, it creates new bank reserves, and these new bank reserves are now on the private bank balance sheet. So that just to illustrate how QE works. And now how is cash enter this equation? Well, cash can be exchanged by bank reserves. Bank reserves and cash have convertibility between them. So the only thing that we do is that central bank converts some of the bank reserves into cash. You can see this here. And whenever somebody wants to take out some of their bank deposits in the form of cash, these bank deposits will be reduced and cash will leave the private bank balance sheet. And this is illustrated here. I hope it is more or less clear. I will be happy to answer questions later. So the key ideas that I want to put into the table is that for society to have money, governments, companies, and people have to go into debt with banks or the central bank. There is no other way of increasing the money supply, and we commented on this before. Also, money is entered in circulation through lending or asset purchasing, never without strings attached. And liquidity and solvency risks for banks become everybody's problem, as we want to ensure that bank deposits remain as safe as the bank's reserves that are backing them. And this is where problems begin. Where do all of the problems that I will comment arise from? Well, they come through the need to privilege and help and support the banks on this risky business they manage, they run, and try to make these deposits safe. So let's comment some of these privileges. First of all, we have deposit guarantee schemes that are paid by the taxpayer. If banks had to purchase the insurance on the market, it would be much, much more expensive. And I did some numbers for the Spanish case, and it's mind-boggling amounts. It's like 20% or 30% of their profits this year could be all lost if they had to purchase this insurance in the market. So we are giving money in subtle ways to banks, but there are more direct and visible ways, such as bailouts. Whenever they enter solvency problems and there is a big bank crisis, 2020, 2008, the state devotes some of the budget from taxpayers' money to filling the voids of the banks, and whenever they sell these assets back to the market, they usually do this in unfavorable conditions with immense losses for the state. We also have this privileged access to central bank money, which is essential to settle down transactions at the end of the day. Central banks acting as a clearinghouse for private banks. And whenever a payment service provider wants to access this really safe money to settle transactions, they can't. They are forced to go through the banking sector, and thus this creates destroys possibilities of competition. There are no alternatives to having your money in a bank deposit. And this also follows as CBDCs, central bank digital currencies, are proposed. Banks are lobbying so that they have strong holding limits, so that there is not much bank deposits turning CBDCs. They are not so afraid of cash, but they also try to eliminate cash. But because cash doesn't provide the same kind of capabilities that digital money nowadays provides, which are essential for our economies. Also, we pay this bank reserve a big interest rate, and it is amazing to see that how a really riskless asset that banks hold at the central bank is now being paid immense percentage points of interest rates. And in the case again of the Spanish banks, these last 3 years they had record profits, and half of them can be attributed to this payment from the central bank, which is kind of absurd. It is actually money that the state doesn't get. So it is very costly for society, all of this. We also have lender and deal of last resort facilities for banks when crises hit, and all the seniorage they gain from money creation. And this is very important to my view, which is the consumer protection, antitrust, regulations, and so on. They are very lax, very diluted in order for us to keep helping the banks to be profitable, to gain, to increase their market share, and so on. And so, as long as we have this fragility in the system, we are not going to be able to be more strict with those. So, also, the ways we can control the amount of money are very dysfunctional, and the way we can avoid banking crisis is also very costly and creates a lot of barriers and inequality whenever applied. So, all of the current system is kind of messy. And so, in a nutshell, we end up wasting huge public resources to keep an unstable system rolling, ever more concentrated and inefficient, that doesn't allocate money in everyone's interest, with increasingly bigger systemic risk attached, and because there is not a competitive, safe alternative. And this is the main point I want to argue here. What would it happen if we had a competitive, safe alternative? I mean, cash, but adapted to the digital age, digital cash, that would be. So this is where digital public money enters the scene. I believe that it provides the safe, stable, and liquid alternative the state is meant to provide, thus creating a choice for consumers. People wouldn't be forced to hold bank deposits, and they could hold another safe thing. How would it be created? Well, we talked before about the nonsense of the central bank balance sheet. Now I take upon that. Imagine that we just create new cash and it enters directly citizens' accounts with no debt attached, so it would increase the equity of citizens, and that is what I'm picturing here. What do we put in the asset side? It really doesn't matter. Central banks do have special accounting rules applied really because they have the power of money creation. That is an intangible asset that is difficult to measure. And also these bank reserves, what is the difference now with digital public money? There shouldn't be any difference, so we should call them the same. So for public money to be really game changer, it should need to have these characteristics. Be created debt-free as a gift with no strings attached. Available to everyone without limits on amounts, not different from bank reserves, and I would argue without interest because there's no need to pay for a safe asset. Only states are required to use it, but I believe it is very important that there are private options available for companies and consumers to have choice. So if people do not trust the state money, they could rather use another one. But probably the state money is going to have very good qualities in terms of safety, stable value, and so on. And I believe that it would be widely accepted. It would have this network effect, and probably the space for private money creation schemes would be much smaller. So what would then be the rationale for rescuing private forms of money if people had a choice between public safe money without interest or private risky money with remuneration? That is the main point I want to make. And I've argued this with actually the writers of Macmillan, the writers of The End of Banking that Lucille mentioned before, but they do not agree. They say that we in the past rescued supposedly risky forms of money that ended up under the umbrella of the protections of the state. So how can we be sure that we will not end up also rescuing these private money creation schemes if we allow them to happen? Well, this is only my opinion. It's not really science now, but I believe that in all of these cases, where, for example, bank deposits become very widely used, and even though the Bank of England was not supposed to rescue them, they became much better form of exchange and payment system than the cash, the bills, physical bills that there were at that moment, so that it was really impossible to let it disappear and be destroyed. So I believe that now, if we provide a good enough means of public payments, then we will have our hands free to do these kind of things like allowing private forms of money creation to go bust if they end up not working. And that is something we could debate later if you want. So to illustrate this point also, now we would have a very easy way to put money in circulation. In the top square represents all of the things, all of the economy that demands money, or things like look like money. They have liquidity, stable value, and safety. And below, it is the different forms of money that are fulfilling this purpose. Imagine that some private forms disappear, because imagine banks keep doing this fractional reserve banking, they create their own free banking, self-managed clearing houses, but it ends up failing because they enter in a bubble and so on. Well, in the past, that would mean deflation, that would be maybe the economic activity decreases in order for us to cope with this decrease in the money supply. But if we had this very simple way to put money in circulation by giving it to citizens or governments directly, it is as simple as creating more, as putting more in a keystroke and put it there. And I talked about central bank before, but I will question that idea really. Because why having central bank when you don't have to rescue or privilege or safeguard any of the private actors that may be involved in money creation? Well, you don't. So you wouldn't need lending, asset purchasing, collateral frameworks, and all of those monetary policy tools that we have right now. Why not having then a monetary authority that provides a free public payment infrastructure and can control inflation by giving new money directly to society? And a disclaimer, I'm not so sure what to do when the economy decreases and we need less money in circulation. I know how to solve whenever we need more, but that is something for another time. So imagine a world where we can get rid of all of these things. Like the benefits are immense in terms of resources that are free for the state, that are not wasted doing these kinds of things. And there are much more space for competition in lending, borrowing, investment, payment services, and so on. We provide like the foundational layer of public infrastructure for payments upon which different payment services providers or the social economy can build over. No? So that is my vision for the future a little bit. And again, by just nationalizing money creation and leaving finance on the private market side, we are not talking here about how could we influence allocation of money. I believe there are many ways in which we can do this without having to have a public bank or without other proposals that I see around. And just by doing this, we avoid both public and private monopolies over money creation and provide more choice for investors, savers, etc. We reduce the need for risk regulation. This is all of the Basel III regulation. It's very complex. It has loopholes. Banks do get around it all of the time with these shadow banks first, now with other things. But we could also have consumer protection and antitrust laws to be much more stricter. Even we could have other kinds of requirements like capital requirements or something that for products that are aimed for general public and these kinds of things. Right now, we are not doing this to help the banks to be profitable and to gain resources from markets. We could also have less taxes, less public debt, or more public spending. In general, we are realigning risks and rewards. If something has risk, it is real and it may give you a reward. Banks may offer you to have your money there and give you an interest rate, but you may be aware that you have to be aware that if bank fails, you lose this money or it loses liquidity or something like that. And in general, and most importantly, we stop subsidizing debt, thus favoring equity investment. Because right now, believe it or not, we are subsidizing all bank lending. This is a general subsidy. All of these privileges we said before is immense, the amount of money we are giving banks. And this is not competition, this is just privileges. So most important of all, we break the rent extracting debt cycle. We get rid of debt as an essential thing to keep going so that we can empower societies to decide over the future without debt pressure in GDP expansion, or we get rid of all of the redistribution from the poor to the rich through interest payment in every price, all of these things, and allow for debt cancellations and reparations without risk of bank crisis. There may be other concerns we have to deal with, but at least bank crisis shouldn't be a thing anymore. It comes to my mind now the book Killing the Host by Michael Hudson, where he talks about this loop of debt that traps whole societies and that makes financial sector so powerful. So this is very important also to me. It is important to imagine how a simpler system would look like, because sometimes it is difficult to move beyond the current monetary policy tools and so on, and imagine what would be the role of smaller banks, social currencies, etc. in a system like this. And just to give you some hints, in my mind, there would be much space for smaller banks, fintech companies, and different lending and borrowing intermediaries to give services and to give products to people with much more competition. And with this unfair competition of banks that they currently have, we shouldn't favor any more big mergers and big banks to avoid the fragility, because there wouldn't be any fragility whatsoever. So decentralizing the system would be rather possible. Central banks would lose most of their toolkit and they would become very simple entities like a money register with money creation capabilities, and they wouldn't profit from that process. And treasuries will find themselves with much more resources, less need to go into debt, and whenever they want to go into debt, whoever wants to bear this risk, they can. But there's no need either to rescue government debt at some point. Right now, it is under the umbrella of state protections because banks depend on government debt to be worth what it is so that they can keep being profitable and we avoid banking crisis. So I really want you to try to imagine this different world. And now the difficult part, and I'm going to be a little bit critical with other approaches, which I in general like. I like the aims and the objectives they pursue, but I encounter them all of the time, and I believe they are a little bit a far stretch. They try to address money allocation problems, which right now depend a lot on money creation schemes, but they rather don't touch the basis and the underlying structure of the system. So this is my critique. They are mostly focused on improving the allocation of money by using the current tools. So I would say that, for example, this is the kind of things I find all of the time in green banking circles, the growth circles, in the MMT world, and so on. And also the ball health initiative, the referendum we had it in Switzerland a lot of years ago, in 2017, I believe. They aim also for forbidding private money creation by banks. Also, I think some of the AMI proposals went a little bit in this direction. And I believe that it is really very difficult. It relies on increasing regulation, increasing complexity instead of decreasing the need of it. Also, stricter capital requirements and other regulations are all the time being repeated, and I support the objectives they pursue again. But I believe we have much stronger move to do and much easier, really, right now, given the current balance of power, that would go to the root of many of these problems. So why not try first to reform how money works and then create another whole of regulations to direct money allocation towards where it's needed or increase consumer protection and so on. So the proposal of MNT sometimes it is allow central banks to purchase all of the state debt so that it gets monetized and thus budget spending becomes money creation. Or another way of doing so would be allow overdrafts without limits. Let's say it means treasuries could have negative balances of bank reserves in the central bank. These two things indeed create the capacity of the treasury to create money by spending, but this creates this duplicity of powers that I believe is not really desirable. Right now, they are already a bit overlapped. Let's take, for example, the European Central Bank. We have bought a lot of nation state debt, German treasury debt, Spanish treasury debt, and so on. So, in a way, this yield of the interest go to the central bank, and the central bank profits go again to the European Union, and so on. So, in a way, we're already allowing treasuries to create a little bit of money. This government debt is monetized with bank reserves, and these bank reserves allow banks to, or the treasury to spend them and to create new deposits somewhere else. So this is indeed creating money, but also treasury bonds could also be monetized by private actors, and it do has some risks there. So this is also interesting to me. Many people, especially in free banking school, Austrian economists, and so on, which I do not generally agree much with them, they also are aware of the critique of the current system in many ways, and they would really want this to be separated. And I believe there is not much problem because the treasury still and the state still can do all of the things it is aimed to do in terms of improving the economy. That's just another personal opinion. So some questions that come to my mind, is increasing central bank's balance sheet the only way to increase the state resources? And my answer is no, we don't need central bank balance sheets to be ever expanding. Do we need such complex regulations in place just to keep managing risks that affect us all? And again, the answer to me it is no. We could get rid of most of this complex regulation and have safety and stability by design by having resiliency in the system, different forms of money and one which is provided by the state which is totally safe. Aren't there other ways to direct financial resources to what society needs, which doesn't involve direct public control? And here my answer is yes. I believe fiscal policy is very powerful, regulation is very powerful, and if we want something, if we want a more decentralized finance system that works for society, that doesn't encourage unnecessary consumption, that doesn't encourage speculative bubbles, then I believe the state can make all of the things we want profitable and make the others unprofitable. And that would be my favorite approach because it's much simpler and it's much clearer which powers do each institution have. And how much space is there for private money creation in the case that public money works well enough? And this is a very pressing question to me. Maybe the free banking school would say a lot because people wouldn't trust the public money and they would create their own private schemes that would work as a clock. But I believe that that's not true, and most of the money creation right now being done in the private sector is there, and it succeeds because it somehow gets some of the protection of the states, direct or indirect protections, and central banks. They are kind of behind all of this. For example, stablecoins. Right now, stablecoins do monetize government debt and provide a liability which is very easy to use, stable in value, and so on. But they have really some risks there because this government debt could be not repaid, but they believe that central banks will always rescue government debt so that they are also a little bit under the umbrella of protection. So just to illustrate a little bit these points. And I'm very happy I'm finishing and we'll have some time for the debate later. Some of the strategic concrete steps. I am an action person. I am involved in the movement, trying to create campaigns on social media, trying to push for reforms everywhere and try to put these ideas everywhere. And it is very important for me, at least, to see where the cracks on the system are right now. What are the hot topics? What are the clashes of different forms of power and invested interests, so that we can move forward in our purposes, which I believe we have to be humble and try to surf the waves as they come and not always pursue the ideal reform all the time. So things that I wanted to comment. Big tech companies like Facebook, Google, and so on, stablecoin issuers like Tether and others, and cryptocurrencies are pointing out bank privileges everywhere because they aren't being allowed to replicate the scheme that banks did in order for them to also profit from money creation with fractional reserve banking, or any other risky scheme that they come up with. So they also are having a really difficult time to share enough risks with banks, as shadow banks did in the past, so that they also fall under the state protection umbrella. And quick side comment here. Bitcoin is already a little bit under the state protection umbrella in the US because Donald Trump has allowed that banks in the US can lend money to people so that they can buy cryptocurrencies. So cryptocurrencies volatile risks can affect some of the loans that banks did, and thus affect banks' solvency and liquidity. And if imagine Bitcoin falls, uh, people may distrust these banks that lend money for purchasing Bitcoin, and there can be a run on these banks, so that maybe the state decides to buy Bitcoin so that the price of Bitcoin goes up again in an indirect way of rescuing this bank. I hope the idea is clear, but these kind of things can happen, but they are not easily happening all everywhere, at least not in the European Union, as far as I know. And so that is why all of these tech companies, stablecoins, and cryptos are lobbying against the privileges of banks, and they are publishing in newspapers and making them obvious. And if you don't allow me to do this because it's risky, why do you allow the banks to do this if it is the same? But really, they would rather prefer to join them rather than destroy the privileges for everyone. But we have to use this opportunity. Then every major private player, that is also interesting, benefits a lot from inefficiencies and costs on the bank deposit payment system. Our payment system does really work bad, has a lot of fees on it, and it's very slow, especially for bad international payments. And this also creates a lot of opportunities for different private forms of money to arise. But if we had a better public money, this space would rather decrease. So all stablecoins and cryptos and so on aren't really in favor of having a good functioning monetary system, and they also are a little bit skeptical about our proposals. But we have to also take something else into account that is on our side right now, which is that just by having some governments, and I'm thinking about China at the moment, committed to prioritize efficiency over vested interests of banks and other payment services providers, we have huge pressure in every other country to do the same. Otherwise, they could face the risk of dollarization or yuanization. What I mean by this? I mean that if China decides that they want to work for their economy and provide a very efficient, very cheap payment system that benefits their economy and not any finance world or finance markets, then this currency that the Chinese have created can be used then abroad because people would see the difference. Could I use a really safe asset that is backed by the Chinese central bank, or should I use a risky asset backed by a American bank? Well, this is a real risk then, because if people in your country start using foreign countries' currencies, then you lose some of your sovereignty. And so that is why many countries are really thinking about improving their monetary system and challenging bank privileges, despite the intense bank lobbying against this. Many companies and people also suffer from these overpriced payment systems. Big companies, big multinationals are really suffering all of the costs that they have to deal with just because they use a very bad payment system monopolized by banks. This is also something good for us. We can ally with them, and they would rather be in favor of all of these improvements of having digital public money around. So also borrowers and lenders have very poor remuneration on their savings or very expensive credit because the market is very concentrated. There is not much competition, and big banks do a little bit what they want. So what else? There are huge senior benefits, and this is very important for us. The transition is easy because the public sector would gain a huge income just by transitioning all of our private money, or just half of it, even half of it is a lot, from private bank deposits into public central bank digital currency or private public digital money of whatever form. This is very interesting because different people on health, for example, they argue that we could use this income to cancel many of the debts, private public debts, But there could be many other uses we could give this. We could also use this to convince banks to help them to adapt to the new system while they lose their privileges. We could use this to deal with the burst of bubbles that we may provoke once we stop this money creation machine that is fueling all of these housing and financial bubbles. So we could be prepared. We have ammunition to deal with the problems we may cause by removing these privileges of banks. And also, and lastly, I think the having public money is much more achievable and can have broader support, both by progressives and liberals, than trying also at the same time to have public finance, to convince people that by having public banking and not private finance, we would have a much improved credit allocation. I believe that the first step is opens up a lot of space, having public money, and then we can have other discussions later. But join together all of the efforts in this first step. I think it's crucial so that we get rid of some of the most powerful vested interest and gain already most of the benefits that this change can bring about. And I just wanted to mention that there are many ways that I've encountered that we could achieve this change, and all of them involve creating an alternative to bank deposits and then creating the conditions so that we can eliminate progressively all of the privileges and protections of banks until we end up in a system where there is competition, where there is a free market in payment services, but we have a public infrastructure behind it that gives us all safety and cheap payment service, infrastructure. So I think that was it. There are many alternatives and all lay down different viable paths towards the end of financial parasites. And I would argue that some do better than others. So I just wanted to point out some of my references. These are the books that influenced me the most: Perry Merlin, Martijn van der Linden, Jonathan Macmillan, and also Fernández Ordóñez. But there are many others that I've learned from that were discussing with me many of these ideas. And I am always learning more, and I'm open for any kind of criticism, improvement, or whatever you may come up with. So that's it, and thanks a lot for your more precious asset, which is your attention.
Thank you. I'm going to make sure. Yep. Thank you very much, Mario. That was a a tour de force of our present system. I'm going to let questions for AMI and bills and what might get into Parliament or legislatures or the Congress in the U.S. Those questions go to other people. I'm going to ask, I just want to point out, play with some of the thoughts you have right now. First, I want to mention that we're going to go about 4 minutes over the schedule. And so David Sipley would begin about 4 or 5, maybe 5 minutes later than schedule. And so we're good. We want to give Mario his full time. One of the things is, well, an easy one to begin with is CBDC, Mario, and your thoughts about that. And I just want to preface it with, I'm familiar with Huber, of course, and Ordóñez, but I think what's happening in the United States is that there is still a lot of basic concern about CBDCs and how they're going to be rolled out. And the Fed has taken a slow approach. And for the audience too, in my view, I think also in Mario's view and Huber, CBDCs are a government money, and they do prevent banks from creating money. It crowds in on their reserves. However, the concern is that it's top down. There's state control, big brother is over you type of feeling, Mario. So, and then Koro Yamaguchi, who's getting that prize, and the Japanese scholar on it, is trying to substitute electronic public money. So have it the public money coming in the public sector, but not through the central bank. It could be some other public administration means, if you will. But your thoughts on what's going on with CBDC and this controversy?
Glad to answer. So indeed, I do favor CBDCs and also stablecoins and so on. And many of you may think this is dangerous because I'm also aware that CBDC design is very important. And if it enters just as a complement to bank deposits, but you require to have a bank account, or if they are not mixed with bank reserves at any point, so we keep bank reserves there, or if privacy is not taken into account, or if it is forced use, no? If they become legal tender and very much imposed, and we try to forbid other forms of private money creation. Those are things that I don't like, and I believe we should try to fight for better designs of CBDC. And also stablecoins. Stablecoins, I believe they have some risks on them. They have some problems for developing countries, for example, that are being dollarized with US denominated stablecoins, dollar denominated stablecoins. They also encourage cryptocurrency investment, which I don't think it is much useful for society, and so on. 90% of them, of the stablecoins, are used in cryptocurrency markets. So all of those are a little bit concerning. But I believe that our critical first step to move towards what we want to end up is to open access to central bank money somehow. So if we allow stablecoins to be backed by central bank money, we would be indirectly allowing everyone to have something backed by central bank money. If we allowed CBDC to be used by people, then we would have an alternative to have the money in the bank deposit. As at the moment that we create a digital public form of money, or that is backed 100% by bank reserves, then we have the banks complaining that bank disintermediation is going to break havoc in the economy and so on. And this is nonsense. This is all of their problem. This is the fragility of their system, not ours. So I believe that first step is crucial, and then we should push for the removing protections of the banking sector.
Okay, we got a line of questions, but I'm going to ask general ones just to tease you out a little bit more. If I'm a person and I'm saying, and you explained this very well, on the private side, and if you're going to invest money, and if it's risky, it's risk. You've got to take a risk, and you may lose money. So there's a distinction between that public and private, that private investment. There's risk to it. So if you want a good interest rate, it should be risk oriented if you're going to take that risk. And let's go back to starting in the 1970s, in the beginning of shadow banking. We have what happens if I'm going to call this, everything I'm going to say now is going to be considered a counterfeit money, just to hear what you have to say about it. So money market mutual funds that come up as explained by Macmillan, and that whole system. And that's to get around in the United States, it was to get around a cap on interest rates. But since interest rates were high in the 70s, the banks wanted to pay a higher interest rate. And to get around that cap, they used money market mutual funds as a means to do it. But that's breaking down the intent of the original system. So you could consider it a counterfeit money. How about other counterfeit monies? Why not other crypto, Bitcoin? Stable coins, and stable coins was one of the main ones. They checked out, it's supposed to be breaking the dollar, and it should be backed 1-to-1 with the dollar. And they looked at how one stable coin, I'm forgetting the name, Tetherin or whichever, it was leveraged 42-to-1. And it was like, oh, there's a problem there. That Lehman Brothers was leveraged at the same amount. So I'm wondering, and then when you were comparing China China got rid of all that stuff. They went to keeping it simple, a good public money, and something that could be reliable. Conservatives in this country say as good as cash. We want the cash, and that's part of the reason maybe against CBDC a little bit here as a conservative backlash too. But let's look at what's going on in China. So anyhow, you got the question. How do you what's going to be a good way forward and what's not going to be counterfeit?
Yeah, so to address that question, I believe that the key thing is that when we are able not to provide public support to these private schemes, we don't care. If they do create money or this shadow bank thing, and they call it in US dollars, and it's denominated in that, and supposedly risk-free, stable, liquid, and so on, and it ends up not being like that, I believe we should have consumer protection that makes it clear the real risks behind all of this stable coins or whatever, cryptos and so on. But then it is very important that we do not depend on rescuing them for anything. So once we get rid of the fragile point of fracture we have in banks themselves, then there's not connection with them, not connection with anything that can break. So I believe, and this is also not, I'm not completely sure, but I believe we could be it would be possible to allow them to fail, and those that use them and didn't take into account the real risks would lose their money or lose liquidity or lose whatever. That is my answer. And in terms of the Chinese model, I'm not an expert there. I'm always learning more. But what I believe to be very simple is that by having more choice, by having also the private sector being able to provide means of payment and different other schemes of money creation, I believe we have some more guarantees that the state monopoly is not being abused for bad purposes. That's it. It's just centralizing power and having more guarantees for abuse of power, not only private but also public. But in general, the Chinese system, I think, their priorities do not align with the financial sector priorities as much as here, and so we see very good positive things there many times.
Yeah, yeah. Thank you. Let's go. I I have four more circles by which for me to develop thoughts, but let's go to questions. Mike Holden's first and then Joe. And I'm going to check in on our next guest too. But Mike, please go ahead.
Yes, am I coming through?
Yes, you are,
Hey, Mario.
Mike. Yes.
Hey, Mario, thank you so much for all your great work and your presentation here today. Very much appreciated. It was very clear. You went through all of the relevant issues with the different types of monetary reform. So, again, thank you for all of your work here. My question for you, I posted it in the chat as well. I had a phone call come in, so I was disrupted midstream. I just wanted to clarify something with you. Are you advocating for a mixed money creation system where the government creates a part of the money supply and the commercial banks retain their ability to create money? And if yes, the percentages that you're advocating for exactly, how much would you advocate for each?
So that's a very good question, Mike. Thank you. And indeed, what I'm saying is that I would allow banks to keep doing what they do. I believe that sometimes we focus too much on forbidding banks to create money out of debt and forbidding any other thing that looks like a bank and does this kind of debt monetizing and offers instruments, financial instruments that look like money. Forbid all of that. I believe that is very, very difficult, and it involves a very high degree of control over freedom in the markets to do contracts and to engage in risks and so on, and some innovation can be lost there. So what I think is that we could afford ourselves to simplify all of this complexity, create a public money that would have all of the safety of the state and do not share this safety with anyone else. So if anyone wants to create a bank and have a little bit of state money backing it and also long-term debt and create bank deposits for whoever wants to use them and provide payment services for those, well, let them do it. But if at some point they go bust, people that hold these bank deposits should bear the risks they had. They may be remunerated, but they would also have to face these losses. That means I would allow free banking school to do their experiments alongside a public money infrastructure. And this is very useful. I am not sure what would the percentages would be at the end. I'm more on the side to think that the amount of space free for private innovations in money creation schemes would be very small. That is my feeling, because that I believe that the state creating a good enough money would crowd out many other private forms of money creation. But I would believe that there would be some, and there wouldn't be none. And people distrusting the government would rather use these schemes for because reasons of ideology, or maybe because they come up with very good schemes and prove themselves to be worth of some trust, no, trustworthy. So that would be my answer to that. I hope it is somehow clear, and it is. Difficult for us that we also all the times believe this is very bad. But if people want to engage in these things, why not allow them if they are completely aware of the risks that are involved?
Okay, thank you, Mario. One follow-up briefly, if you don't mind. Obviously you're familiar with the NEED Act and the proposal to create a transaction account and investment account system. So it would drastically modify the bank business model, but it would create a situation where the government would create 100% of the money supply, and the investment accounts would then be used for further lending. Do you believe that this is insufficient or not an effective policy that could be destructive for the economy? And if you don't agree with the fundamental structure of the NEED Act, I guess just explain why, if you don't mind.
Yeah, very shortly. I am not completely aware of the inner workings of the NEED Act, so I'm not completely sure what you mean. But I understand that it somehow colludes again financing with money creation, and it gives this power to the state, to the treasury, for example. So I think those ideas may be good intention, and I may support those if we have the capacity to implement them at some point, maybe. But I would rather favor other solutions that go step by step, and that first democratize money creation, put this in the hands of an authority with the sole purposes of managing this payment infrastructure, the accounts of everyone, payments, and creating money and giving it to citizens or governments directly. And then if we want to improve the allocation of money, I would use other tools like fiscal policy, or maybe create local banks or laws that encourage a decentralized finance system that is encouraging the activities we want. Especially, what I believe it is much more desirable is that the government creates subsidies and taxes that makes every desirable economic and human activity profitable, and that makes all of those that are really not needed anymore unprofitable, and then let finance work for us. I'm not completely sure of what I'm saying, and I always doubt my own ideas all the time, so I'm free to I'm open to changing my mind at some point, but at this moment this is what convinced me the most.
Thank you, Mario. Very much appreciated.
Well, Keynes changed his mind, so you can too. Thanks very much. You covered a lot, and and you covered it very well. In terms of the stable coins, Ronnie Phillips is here today, I think, and maybe we could have him put in a few opinions about that. But from what I've heard him say in the past, I think he agrees with what you said. And I think, as Steve pointed out, Tether or somebody was way under backed, and therefore, as you know, even though they said everything would be backed, and of course, the government always has to react to these unethical characters, and now they've put in the 100% backing rule in their recent legislation. Quick question for you about your thoughts on what to do with government money spent into the economy. The theme over and over again by many of our presenters has been it's an opportunity to ensure a social justice agenda. And there's numerous people have had different ideas on that at the conference. And I just wondered if you had such an agenda as well. Do you see it as an innate part of nationalizing the money, or are they two separate things for you?
Yeah, so first, on the USDC stablecoin by Tether, I'm not aware of those things, and I believe that they are backing their 100% or even more their stablecoin issuance with U.S. government debt that they believe is completely convertible to US dollars at any point, and this is something that I'm not so sure about.
Mm-hmm.
Yes, I do believe that money reform is like an enabler. And many of my ideas of how the economy should be improved, I'm very much in favor of rethinking the role of growth in the economy. And also, I believe that many of the activities we do should be rendered unprofitable at some point because I believe they are destroying our future capacity of providing goods and services or our happiness in general, no, and justice in the world. So that's things I think I would say broad things that we may all share. But I don't think we require ourselves to agree on all of the things that should be done in order for us to do money reform. Because people may think taxes should be reduced, and maybe yes, we could reduce income tax just by having money reform because the state saves so much resources that we could have less income tax. We could also have more public spending on schools, on basic infrastructure, on rewilding nature, fighting climate change, or whatever you are, whatever people decide politically. We are just here creating the space so that politics can take place, which right now is not there, even there. We are subject to the willing of the finance sector because otherwise we face a banking crisis. So having our hands tied, it doesn't matter who you vote for in a nutshell.
Thank you.
We're over time, and so let's take a 2-minute break, just a 2-minute break, and then we'll start with David Sipley then. Thank you. And thank you very
Thanks,
much,
everyone.
Mario. It was wonderful, and it was a good exchange, and we've got to walk forward together. So we need more exchanges like this. So I look forward.
It's been a pleasure.
Gracias.
Thanks.
Gracias, Mario.
That's it.